Hello fellow investors. After recent offering announcement and stock drop on Friday, we noticed a lot of accusations about VGFC management. This video is a following up of last video in which I explain the details and the timing of the offering. If you haven't watched the last video, please click on the right corner above. They are accusing that the management is making the offering for their personal interest at the cost of existing shareholders.
So this Rafael says, sold my position on VGFC. Well, the management is worthless. The management is worthless. So soon as they see gold again, they will do what they do, without performance as today. The very move is disappointing. I agree that they threw retail investors under the bus. Management team may have started the martini launches with the capital risk bankers.
First, please take 3 seconds to think about my following question. Of all the shareholders in the world, whose personal asset is the most diluted after this offering? 3, 2, 1. It is these two co-founders, Mitchell Scott and James Davison. Together they hold about 25% of the whole company. Yet there have been no insider selling since January this year. These two men could easily cash out more shares when stock was at its peak around last December. Yet they haven't. Their personal assets will be the most diluted on a value basis after the offering. This shows that they are building the business for long term. Now let's step back and take a look at what they have achieved since cooperation in 2017. They started from a little kiosk to a neighborhood restaurant to a company with multiple production facilities and Nasdaq-listed company within 4 years. And all this without the involvement of venture capital, without losing control of the company. And thanks to them, we are able to get in before the institutions. There were complaints about gluten-free options a year ago. Boom, they introduced a whole line of it. Lack of varieties? Boom, they presented 25 SKUs to date. Not your taste? Boom, there are 20 to 30 new SKUs to be launched the next year.
I mean, obviously the whole plant-based food space is on fire right now. So looking at sauces, spreads, dairy alternatives, ready-to-eat meals. I think we've got 20 to 30 products scheduled to hit the market next year that we're working on with our R&D team.
Revenue rose by 4.6 times 2020 versus 2019, and the revenue for the first 2 quarters in 2021 is already 17% more than whole year last year. Adjusted gross margin at 38%. This is not what we would usually see in food manufacturing. Whole sales grew by 438%, e-commerce by 1,400%, achieved under production limitation. Production capacity will grow to 135.5 million pounds by 2024. There is a video of revenue forecast and my bullish thesis in my channel. Go ahead and check out if you haven't watched. Here is an update of Rupert and Patterson facility brought by Edge Investment.
So currently we're producing 13,000 pounds a day of product, ramping up to around 40,000 pounds of product per day by the end of this year. We're actually, this month, we're beginning food production there. We're starting with our taco stuffer, which is one of our most popular SKUs. The Patterson facility is basically initially going to be producing what we're not producing yet at the Rupert facility. So that's some of our more kind of unique SKUs. So it's our ribs, our steak, our stuffed beast, some really crowd favorites that we're currently making in Victoria on a smaller scale. So scaling those up in Patterson is a big priority for us.
Patterson facility capital expenditure is expected to be at $30 to $50 million. Previously, the company has secured $20 million from Canaccord offering. With the new offering of $30 million this time, there will be $10.5 million more to be allocated on operation scaling. Therefore, that makes $30.5 million, which is the lower bar of the original budget. Personally, I would like to give a sum up for their execution. Let me know in the comment section what you think about the management execution. In the last video, I mentioned that the institutions will be war-crossed before the offering. They would have received confidential insider information, including Q3 earning, online sales data, ongoing negotiation, pending orders with large chain stores, production ramping details, etc. This man, Justin Steinbach, has been appointed to the board of directors only prior to Nasdaq listing. He previously led global sales development marketing for Dannon's food service division and was responsible for building strategic global partnership with Starbucks, McDonald's, and Subway. What kind of connections has he brought to the table? All this information is unknown to general public. That's why we are not playing on a fair ground. The war-crossed institutions would communicate with the placement agent for their estimated subscriptions. Based on their expressed interest, the agent gives a conservative sum, which is 15 million units. That's why I think oversubscription is a very likely event. We are now looking at short positions of Canadian Stock Exchange venture capital. The company's short interest has grown by 85% on the announcement. Previous high short interest occurred only when share was at its high, but this time it's at its low. Interesting, huh? Shout out loud if you are thinking what I am thinking. Say, if I were working for one of these institutions, and I am super interested in the company, and I am about to join the offering, what will I do? I will first short the company and cover my short position before deal closing, so that I could take profit from the short position and build a safety margin for my long position. Now all the trashing out of nowhere makes sense. Don't be surprised if the stocks suddenly have a run up before closing today. Sit tight and enjoy the show.